Okay, let's do a quick exercise on this. So it tells you this bakery reported sales revenue $52,000, cost of goods sold $22,000, and they ask you to compute the correct dollar amount of gross profit here. So here you see two cases. A states that the ending inventory you see here on the balance sheet, that's stated in this company's balance sheet, is overstated by $6,000. Second case, ending inventory is understated by $6,000. So this is the dollar amount that's reported in income statement. Sales revenue, cost of goods sold, and gross profit as of now. But under a situation of ending inventory, you know for a fact that it's overstated by $6,000. How would you change this dollar amount to make sure this is correct? How would you edit this? So think about the relationship between ending inventory and cost of goods sold. If that is overstated, what about this? If that is overstated, this is understated, right? So what would be the correct amount? If it's understated by $6,000, and this is $22,000, so meaning you have to add back that $6,000, right? Again, if ending inventory is overstated by $6,000, it has the opposite effect for cost of goods sold. Cost of goods sold, you see right now, will be understated by $6,000. So in order to correct this dollar amount, you would have to add $6,000. It becomes $28,000. Okay? So you would see at the same time, since this is corrected, being corrected, then this gross profit amount also will be adjusted. So gross profit amount earlier, we had an overstatement. Again, this would have the same effect as ending inventory. So this is overstated by $6,000, we subtract it by $6,000. Okay, what about B? So B, ending inventory is understated by $6,000, meaning at the same time, cost of goods sold will be overstated by $6,000. So again, if we go back to the wrong information here, if you want to change this, if this is overstated by $22,000, then you want to subtract it to its correct amount by subtracting $6,000 so that it reaches $16,000. Right? And then B, ending inventory is understated. At the same time, gross profit is also understated. So you add back that $6,000, $36,000. Okay, this problem goes on to state even more detailed information. Remember, after gross profit, multi-step income statement, there's operating expenses, selling expenses, general expenses, and it also states up to the point of net income. And you also need to change net income's dollar amount. Okay, as I mentioned earlier, ending inventory, gross profit, net income has the same effect. So if gross profit is $30,000 here, you subtract $6,000. At the end, net income, you also need to subtract $6,000. Here, if ending inventory is understated by $6,000, you add the $6,000 back. For net income, you also need to add $6,000 back. Okay, gross profit, net income has the same effects direction. One is overstated, the other one is also overstated. Any questions so far? Okay, that's pretty much all of chapter 6. So the last part of this chapter, the estimation of gross profit method, I'm going to skip it for now. Okay, I want to move on to chapter 8. So this chapter, the most important thing to know is you have to know how to do the problems for FIFO, LIFO, average costing. Okay, you have to know what it means. You have to know how to apply it to problems. This week you have homework. Oh yes, by the way, homework is not due next Tuesday, and maybe due the following, after spring break. Okay, so you have 2 weeks to do the homework. Give you 8 problems on for this this homework, since you have 2 weeks. Right? So it's due March 26th instead of next week. Some of the problems you're given is FIFO, LIFO, average costing, how to assign the cost, how to calculate the balance for these inventory. You have to know, in case there's adjustments, what are the two adjusting entries for inventory. One is introduced in Chapter 1, one is introduced just now in the beginning of this chapter, lower of cost or market. Okay, for ending inventory errors, in case there are some errors that are specified to you in the problem, how do you make adjustments? As an accountant, how do you change the numbers and make sure that the numbers is correct? Okay, we're focusing on inventory here because for merchandiser's company, really that is the most important account. That turns into sales later on. Okay, and then sales together, you will have cost of goods sold expense reported. That determines what's the gross profit and net income for this company. Okay, so 5 and 6, the topics are all on inventory, introducing you another type of corporation other than service type of business.